lost. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Yo, what's up, everybody? Good morning. So many reasons to be in a good mood this morning. Let's see. Let's list them off in no particular order. It's Friday, right? It's earnings season. You know, I'm happy about that. And most importantly, stock market can't stop going up. What's that about? New 52-week highs in stocks making new 52-week highs. Crypto yesterday, or I should say the crypto stocks yesterday, just blast off mode. We'll talk about that. Holy cow. Just a lot of reasons to be happy this morning. So we're all in a good mood here on the morning show. It is the best morning show in finance. I'm Spencer Israel, joined by JC Parets. We have Phil Pearlman coming on at 9. Ian Cully joining the show at 9:30. Kimmy and Sokoloff will be on as well, as always, at 9:15. If you're watching on YouTube, smash that like button. Good morning. Jason, Ken K, Ryan, C. Marie, Dan, Jonathan, NP, Mel, Nick. What's up? Hope you're all in as good a mood as I am, because we hyped. Let's go.
What's up, Mr. Israel? Happy Crypto Fridays.
Are you as hyped as me?
I'm a little disappointed. I'm leaving the beach today, going back to reality. You know, fortunately, I have a nice house, and I like having my family in my house. But I gotta say, the beach is pretty sweet. Beach is pretty good. Good.
I don't remember how the market did specifically. What was it, like a month ago when you were at the beach? But if this week is any indication, you should go to the beach more often, man, because we're rolling over here.
Yesterday was the most profitable day of my career.
Really?
Fun fact. I started kind of doing some math like midday. I'm like, man, we're having a good day. And then at the end of the day, I counted. I was like, oh my God. I was telling my mother-in-law, I was like, today was the best day I've ever had in my career. And I've been at this officially over 20 years. And yesterday was the best day I ever had personally, like in the market. I mean, specific in the market, not like in business.
Do you know your worst day by chance?
My worst day by dollar amount, I don't, but by percentage wise, like in terms of like how much I lost of my own money, it was in 2011, Fukushima, when the tsunami hit in Japan and all the uranium like power plants started like melting down, and it was like this disaster. Well, I owned a lot of uranium.
Yeah, all right.
I had a diversified portfolio of uranium stocks. I had the CCJ, I had the URA. That instance really taught me a lot about risk management. Fortunately for me, I didn't have as much money then as we do today. So although it did hurt, and trust me, it hurt. From a dollar and cents standpoint, it was a drop in the bucket compared to now. Sure. It's just a kind of like a random slow day for me, cash-wise, to lose that. But at the time, it was devastating. And it's really important. I'm glad you brought that up, right? Because we all need to go through that. And while that uranium situation was the worst, and for me, there were other situations over the years that caused me pain and to enter into the fetal position on your couch, right? We've all been there. And if you haven't been there, you're gonna. It's when that happens that your journey begins, right? Like you need to blow up. A lot of us need to blow up multiple times to finally understand the power of risk management. I'm going to tell you what, yesterday might have been the most profitable day personally of my entire career. It doesn't even feel that great, right? Like the pain that you get when you're losing money is way more extreme.
Oh yeah.
Pleasures you get, like, I mean, how did I celebrate yesterday? I ordered a bottle of wine that probably cost me a little bit more than, that's not true. It was double what I would have probably paid. if I had a bad day, I probably wouldn't have bought that bot. It was a Super Tuscan 2006. It was beautiful. So that was my small little celebration. But the truth is, it doesn't even feel that good. I can tell you right now that uranium trade, that at the end of the day, I didn't really lose that much money. It just meant so much. That money meant so much to me at the time. That hurt way more than yesterday was even good. That's the truth. So if you haven't been in the Fido position, get ready, because you're gonna.
Jeremiah in the chat, yesterday was also his best day as percentage gain. So congrats to you. All right, let's get to these charts and let's talk about why yesterday was so good.
Well, for me, it's less about being smart and more about being a little lucky, right? And granted, I put myself in a position to be lucky, but let me just tell you what happened. So I own a ton of Bitcoin, but below 31,000, I'm to my capacity, without mortgaging my house to buy more Bitcoin or anything like that. I was essentially a full capacity. I mean, listen, I can liquidate other stuff and buy more Bitcoin, but as far as I was concerned, I owned enough, and I couldn't afford, in my head, I couldn't afford to buy more Bitcoin, but I wanted more exposure. So we owned the Mara 14 calls. It was a trade that we put out about 6 weeks ago publicly, so everybody knows about it. Kudos to you if you were in that, because I don't know, it's up like 300-400%. Those were the 14 calls, and we're pushing 20. So we're 6 points in the money, and these are January expiration. So that was a great trade. But when I realized I didn't have enough exposure in Bitcoin and I didn't want to buy more Bitcoin, I bought the Mara 30 calls again in January. So because I could not afford to buy more Bitcoin, I made leverage bets on the crypto miners. And as it turns out, they've been ripping without Bitcoin going anywhere. So, and again, I'm not smart enough to have told you that that's what was going to happen. It's just what happened. So again, sometimes it's better to be lucky than good. These are just the circumstances that I have this leverage bet in the one that's working, because I couldn't afford the one that's not working, right? I mean, those are just the circumstances. So I think it's important when we do this so that you guys know that, like, I'm a real human. Like, these are real emotions. These are real thoughts. These are real life decisions that we're making in real time. And again, it's not because I was a genius. Because, by the way, if I was a genius, I wouldn't have owned any Bitcoin at all. And all of that money would have been in those Mara calls, for the record. So, it's not about being a genius. It's about, in this case, a little bit of luck. We'll take it. One for the good guys. Bitcoin still hasn't even broken out. It hasn't even broken out. You're getting all of this upside pressure in all. I mean, look at Coinbase was up like 30% yesterday.
Best day ever.
Riot blockchain, Coinbase, best day ever, right?
Yep, best day ever.
Best day ever for Coinbase. Best day ever for JC. JC doesn't even own Coinbase, right? So Riot, Mara, MSTR, right? All of those types of names continue to work really, really well, despite a lack of progress in actual Bitcoin, which I find really, really interesting. So the situation I find myself in, our Mara position, the target was 20. But the fact that we're already there and Bitcoin hasn't even broken out yet, do I stay disciplined and stick with my original plan and take profits at 20? Or do we reevaluate considering how well these things have done and Bitcoin hasn't even broken out yet, right? That's the situation we're in. And for the record, I haven't made the decision as to what I'm going to do, right? But it's important. I mean, I think it's important. I think it adds value for the audience to understand kind of like what's going through my head. Like, I didn't see this coming. I would have said that if Mara and these positions were doing so well, Bitcoin would be at 35, 36, maybe even pushing 40. Like, I would have said there's 0.0% chance that Mara and Coinbase and all these things are doing what they're doing without Bitcoin moving. I would have said there's no chance, no possibility whatsoever. And that would have been very wrong. So, like, you guys who have been around for a while have heard me say in the past, when the market does something so unexpected, that's information, right? So this is information, and that's why, I'm thinking through this so much, and, I don't want to say I'm struggling because this is as first world of a problem as first world problems get, but nevertheless, this is sort of what I'm thinking through. So let's keep this going a little bit. We talked about this yesterday. Again, these are Bitcoin with their Bollinger Bands. This is volatility contraction. And what we know about asset prices, that asset prices trend. What we know about volatility is that volatility mean reverts. We know that. So if you want to be the casino, if you want to be the house, you want to be betting on trending asset prices, and you want to be betting on mean reversion in volatility. That's how you become the house. That's how you become the casino and take money from the, I guess, the people that are bad at math or whatever, like the people that are just like consistently making bets where odds are against them, right? Like the people that are bad at math, like, how like the lottery is a tax on the stupid, right? Like it might not be that dramatic, but generally speaking, asset prices trend. So if you're consistently betting on trending asset prices, you're going to come out ahead at the end. And if you're consistently betting on volatility mean reverting, again, you're going to come out ahead at the end. So that's how I look at it. So here we're looking at the Bollinger Bands contracting. So from contraction comes expansion. Now, granted, in the past, these expansions in volatility have come along with rallies in Bitcoin. It doesn't necessarily have to happen this way this time. In fact, volatility can expand and prices can fall, right? That could very well happen. But nevertheless, we're looking for volatility to expand here. And whichever way price is going to go, my suspicion is it's going to move very violently, right? And based on the weight of the evidence, my suspicion is the breakout's going to be higher, right? So that's what we're looking at there on the Bitcoin, on the volatility expansion. Now, Ethereum, on the other hand, has been quite the underperformer. This has been the this has been the Bitcoin show. This has been the Bitcoin dominance show. But that could potentially be changing now. Ripple came out yesterday. The courts decided that Ripple is not a security. So, to quote the great rapper and poet from Queens, New York, Nas, Escobar season has returned. Okay? So what that means in rap music and rap culture is that it's the lawless, shit show of, there's no rules, right? Like that's what Nas meant when he said that. But you can argue that Escobar season has returned in terms of the altcoins, right? Altcoins are back.
Oh yeah.
We're seeing relative strength. We're seeing Bitcoin dominance come down, right? So Bitcoin dominance is the market cap of Bitcoin relative to the market cap of all the coins together. So historically, as Bitcoin dominance is going up, that doesn't necessarily bode well for cryptocurrencies in general, right? It generally means that all those altcoins are getting slaughtered and Bitcoin is just a larger percentage of the overall pool. But when that Bitcoin dominance is coming down, like it did yesterday after that announcement, that's historically good for the whole space, right?
So JC, put another way, it sounds like there's market breadth, good breadth in crypto.
Hey, sir, somebody's paying attention.
We got the breadth.
Yep. So I think Ethereum's coming. We start taking out 2,100. I think it's a straight shot, straight shot of 3,500 or something like that. I think you got a lot of upside there. If we're below those former highs from last year and this spring, you probably want to be a little bit careful there. But looking for a breakout. And if you want to see some precedent, throw up the Ripple there. Who was it talking about the God candle? There's Terrence talking about the God candle for Ripple. For those of you wondering what a God candle is, I certainly was one person wondering for what a God candle is. Voila, right?
Yeah.
Here's your God candle. Ripple breaking out above that resistance. Throw up the Ethereum chart one more time just so you can see the compares, right? Doesn't it look very similar? Doesn't Ethereum look like Ripple pre-God candle?
It does look an awful lot like it, yes.
Throw the God candle up one more time just so you can see it, just so you can feel it, so you can taste it, so you can smell it, Spencer. Smell that God.
The difference is Ripple had news yesterday and Ethereum did not. So
okay, but Solana was up a whole ton. Throw up the Solana chart. The Solana was up a whole ton yesterday.
Sure.
Matic made serious moves. The Dogecoin did not. No love for the Doge.
They see that. That's interesting.
Yeah.
Wonder why that is.
No love for the Doge.
Not just a great day for the altcoin, it's a great day, like I said, for all the crypto stocks, right? So whether it's a Coinbase,
Throw
which
Coinbase up. Throw Coinbase up.
Coinbase like immediately relisted Ripple, right? On the as they should, right? I mean,
What day did the co-founder buy like $10 million worth of stock? I'm pretty sure that was like June last year.
Here, okay.
Can you throw that into the chat? When was the buy? So it's a big time insider transactions in Coinbase at the lows. Absolutely nailed it. Do I have that right, or is my memory? I'm pretty sure it was summer 22 when they were buying very aggressively Coinbase. Nevertheless, new 52-week highs for Coinbase. My understanding is that there's all kinds of SEC lawsuits and Wells notices and investigations and all that stuff. And to quote the great Smokey, right, from Friday, Smokey, right? Remember Smokey? I don't give a fuck.
I haven't seen that movie. I haven't seen that movie in a very, very, very long time.
So watch Friday, and Smokey has this one line where he's like, I don't give a fuck, right? That's the market talking about what the SEC is doing for Coinbase. It was May 17th. What did I say? June? That was pretty good. So May 17th, near lows. They took some pain there on that purchase for a little bit. How much was it, Fonz? It was about $10 million worth. It was not nothing. It was not nothing. It was a big purchase. But nevertheless, they've absolutely crushed it. So Coinbase up 30% yesterday. Big move. Why don't you throw up the Bitcoin and MicroStrategy chart? So when people are like, well, JC, why do you think that Bitcoin is going to break out? And I'm like, well, have you seen Coinbase? Do you see Ripple? Right? Have you seen Mara? Riot? Have you seen what these things are doing? So it's kind of like, if you look at the one that hasn't made its move, take a look at the brothers and sisters and cousins and see what they're doing. And look at MicroStrategy, right? This is like the de facto ETF of Bitcoin, right? Like this is like, it's not an ETF, it's a software stock, but they own so much Bitcoin. I think they own over 1% of all of the Bitcoin in the world right now, by the way, Spencer. I don't know if you knew that.
I did not know that.
They own a ton of Bitcoin, obviously. So it's not a Bitcoin ETF per se, but
it's all we've got right now.
It's all we got right now.
It's
as good as it gets, So yeah, I mean, look at these two pictures. Samesies. I think Bitcoin is next, and I think it's coming. So, I'm still positive on the space. I'm not really seeing any reason not to be. And listen, Mara, throw up the Mara chart. 20 was my target, but I must say, I'm gonna be driving home from the beach later this afternoon, and I don't know how I'm gonna go into the weekend. I don't know how I'm going to go into the weekend, but, I'm really in that reevaluation process because these things have done so well despite Bitcoin not doing anything. Throw the Mara Bitcoin overlaid so you can see the two charts together. Bitcoin just hasn't moved, and these things have gone a lot. And the only reason that I bought Mara in the first place, and I bought more Mara in the first place, is because I thought Bitcoin was going to go up. And as well as these things have done, Bitcoin has not gone up, Spencer. So I feel like I should probably think about it. If the reason for my trade was because Bitcoin was going higher, regardless of how much money we've made, Bitcoin hasn't gone higher. So my reasoning for owning this hasn't played out yet.
In defense of Bitcoin, at least it hasn't gone down. You know what I mean? Like it's not going up, but sure, it also ain't going down. So that's something.
I'm saying, did you even play the Crypto Fridays bumper? I feel like
no, I didn't.
Why don't you play it for the last chart? So we get it. The last chart.
All right, Crypto Friday. That's what we do on Fridays, apparently. Crypto Friday.
Hell yeah. I mean, we have such a nice Crypto Friday bumper that to not play it, I think would be irresponsible to our audience. No?
That's fine. What was the last? Let's do one more, and then we'll get to the earnings. Oh man, I'm so excited.
Hut 8.
You know it.
Hut 8 mining. I mean, this thing. Let's go. Again, this is a smaller one. This one's under $1 billion, as opposed to like the Mara that's now up to $3 billion. Right? Mara's up to 3.3 billion in market cap. Riot is 3.6 billion in market cap. So these things are large. So this is a smaller bet. Listen, if we're above last summer's highs, this thing's a go. Getting overbought conditions are classic characteristics of uptrends. In a lot of these names, your risk is very well defined, right? Because you got former pivot levels, local highs over the last year that you could trade against. So the market doesn't always set things up perfectly, but sometimes it sets it up favorably for investors. And it's not always, but in this case, this is one of those times where the market is setting it up nicely, setting up favorable risk versus reward opportunities. And as investors, it's up to us to pay attention. And if we're good enough, we can take advantage of the circumstances and profit. That's how I see it.
All right, that's 20 minutes more or less on crypto. Let's go to.
Spencer's like, I've had enough of this crypto.
No, I mean normally
we'll move on to earnings.
Normally,
you're not entertained, Spencer.
Maybe no. I am entertained. I am very entertained by this. But
I don't think you are.
No, I most certainly am. But
I think you're more interested in the earnings season than you are Crypto Friday.
No, I'm only interested in one thing: volatility, because that creates content. And so this yesterday was volatile, great for crypto, and so I'm here for it. But let's do some earnings, and then we'll go to our guest here in a couple of minutes here. So we got the banks this morning. All right, let's start with JP. Oh, here's the calendar, so you can see what we're talking about there, right? I don't know if we'll necessarily get to UNH and BlackRock, but I definitely want to get to JP Morgan, Citi, and Wells. So we'll start with JP Morgan here.
I feel like earnings season just ended. Like we're already starting.
I know. Well, it's because it's been it drags on longer and longer.
It's like my wife. Like when basketball season starts, she's like, didn't the basketball season just end? And I have to remind her that since I'm a Heat fan, our season lasts much longer than say someone like the New York Knicks, for example.
Look, again, it's not so much that I care about the numbers. Frankly, I really don't care about the numbers at all. I'm very interested in what and how the market reacts to the numbers. So anyway,
why don't you tell us how America's biggest bank is doing in during this banking crisis?
Pretty damn good, turned out. You can see there, top line beat, bottom line beat, all their individual segments, or actually not all, most of them came in above the estimate there. Investment banking, FIC, equities trading, their loans came in higher, net interest income came in higher, deposits came in a smidge lower, but whatever. Anyway, so there was the whole provision in there because of the First Republic stuff. But was it First Republic? Or I don't even remember which one anymore. Anyway, bottom line is it was a good quarter. The numbers look good. The market likes what they see. Stock is up this morning. And yes, America's biggest bank doing pretty good.
So no banking crisis?
It would appear that if there were a banking crisis, that it would not be, which we knew this, it would not be in the largest banks, which we, obviously we had some.
I was promised a banking crisis, Spencer. This is bullshit. Stocks, investors should not be making so much money.
I mean, I can try to arrange one, but it might be difficult. So let's do the other ones.
Are you saying that the glorified gossip columns telling you that this is the end of the financial system as we know it were, just sensationalizing?
Look,
it's what they do.
If you want to find a reason, there's always going to be a reason to hate what the company says. If you want to find a reason, there are reasons. But by and large, I trust. I generally.
How many Karens out there? Are complaining that stocks keep going up? Can you imagine bitching all day that stocks keep going up?
Look, again, there's always things to poke holes in, right? I think, if you want to poke holes in JP Morgan, say their credit card defaults, I think were going up. I think I saw that quickly. And you could just choose not to believe any of the comments about that the worst of the banking crisis being over, which is what the CFO said. But again, it looked good, right? Citigroup, kind of the same story. Also, just so you know, I give the we put the EPS and the sales numbers on the screen mostly just for awareness, but like more often than not, I don't have the data, but like the vast majority of companies beat the expectations, right? That's just the nature of things. It's not so much about the beat or the miss, because it's usually a beat. A miss is interesting, right? Because it's rare. But a beat doesn't say a whole lot. We just put it up there really for information. Citigroup, you can see it's on there on the screen now. Same story, right? Just like most banks or most companies, most of the time, they came in above the estimates. Not a surprise there at all. Wells Fargo.
Did you see what these no talent ass clowns did this week at Citigroup? Did you see that, Spencer?
You're gonna have to be more specific.
They downgraded the S&P 500. First of all,
from like 4 to 5 days ago. Yeah,
they completely missed the greatest 6-month period in the history of the Nasdaq. Coming in thinking that the market was going to fall in 2023, and then they have the audacity to downgrade the S&P 500 down to 4,000. Meanwhile, they raised their target but downgraded the S&P 500. So, like, man, this is the state of sell-side analysis, folks. This is Citigroup. Put that chart again. Like, Citigroup has any right to opine on any company. Get your own house in order. Who are you to tell investors what they should be doing with their money? Are you kidding me? Look at this disaster.
Yeah. So again, just to bring it back, JP Morgan, Citi, Wells, all trading higher this morning. You obviously want to see how those gains hold throughout the morning, through the open and beyond. But that's where things stand. And this appears to be the good portion of the bank earnings, because both Morgan Stanley and Goldman Sachs have gone out of their way to lower the bar for themselves when they report next week. So it seems like the consumer banks are doing well. The pure investment banks, maybe not so much. We'll find out next week, but maybe not so much. But that seems to be where things stand. And yeah, Chris, Credit Suisse. Like I still see ratings from Credit Suisse. As recently as a couple of weeks ago, I saw some ratings from Credit.
Is Bear Stearns still opining on equity markets, or have they moved on?
I haven't seen one of those ever, frankly.
But seriously, no joke. Lehman Brothers back in the day used to have really good research.
I'm sure they did. It's not their fault. It's not the sell side desk's fault that Lehman Brothers mortgage-backed securities trading desk like blew the company up, right?
It wasn't the sell side's fault that they were leveraged 50-1 on their balance sheet.
No, not their fault. Anyway, that's where things stand today on the banks and the earnings.
By the way, great book. Larry McDonald, friend of ours. You should have Larry on the show, by the way. Larry McDonald, author of Colossal Failure of Common Sense. If you're maybe newer to the market and didn't trade and you weren't around for that period. I know Spencer was like in elementary school at that time. Great book, Colossal Failure of Common Sense, written by Larry McDonald, who about the collapse of Lehman Brothers, told by a bond trader at Lehman, and that's Larry.
All right, I have to add that to my list. Larry is on my list of also people to reach out to get on the show.
Cool. I'll text him. Let me know. He's in Panama, I think, still.
What?
Yeah, he moved to Panama during the COVID. I think he's still there.
Holy gosh. Okay. People moved everywhere during COVID. Okay, so that's the bank story. We had BlackRock, we had UNH. BlackRock was good as well. UNH, I believe, also was good. Yeah, they're all up. So
the
earnings
UNH is one of those situations, man. This is by the way, this is the largest Dow component. Did you know that, Spencer?
I did know that because we've gone over this a couple weeks ago.
This is the large. Represents 10% of the Dow Jones Industrial Average,
because it's $400.
I don't know if you heard, the Dow Jones Industrial Average is the world's most important stock market index.
It's $400. It's a $400 stock. Of course, it's a large component.
Well, it's higher than that, and if it's 400 and if it's above 450, we want to be long UNH. It's that simple. Long UNH. If we're above 450, I think it goes above 600.
All right. 9 o'clock here. Let's bring on today's featured guest, Mr. Phil Pearlman of the amazing Prime Cuts Substack and the Pro Institute. And I'm sure he's always got good thoughts. Always.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Pearl Dog.
Oh,
Good morning, gentlemen. Spencer, you give me way too much credit there, buddy.
okay.
No idea what I'm talking about.
Okay.
Pearl Dog is,
What's up, fellas?
he comes in here and breaks balls. JC, you're drinking too much. JC, you're eating too much sugar. JC, get away from your desk and go for a walk. I will tell you this, Pearlman. I might not be perfect. I might not be perfect. I'm actually very far from perfect. Just ask my wife. The one thing that I do very well in the Pearlman program is I go for walks. Like if there's anything that I'm consistent, like I might drink too much wine, I might eat too many of my daughter's snacks late night, but I definitely go for walks and I stretch a lot. So those two are good. So I'm knocking a few out, right?
Walking is the most underrated superpower of all time. People believe that it is pedestrian. That's a pun. But it's the greatest thing ever. You get out there, you move your body, boom, boom, boom. You move your body, you allow your mind to wander. And in this world that is just so filled with noise, we need to allow ourselves, our own minds to just detoxify, de-stress. As a matter of fact, that was number 2 on my list of things to talk about today, but I'm going to go right to that one. So it's Friday. The market has been making believers out of non-believers just ruthlessly. I was on Stock Twits yesterday afternoon towards the close, and there were so many bears writhing in pain, so many people that are underinvested that haven't jumped in yet. It's unbelievable. And that's a whole conversation for itself. But here's the thing. It's Friday, right? And you have the weekend now to de-stress yourself because if you're involved with markets, whether it's bear market, bull market, whatever, especially when it's transitioning in the psychology, and we'll get to that, it's very, very stressful. Gains, losses, stressful. Getting into positions, out of positions, stressful. Dealing with clients, if you're managing other people's money, stressful. And so I can't stress enough. I can't say enough how important it is during the weekend. Now it's Friday. It's going to be Friday afternoon in 3 hours if you're on the East Coast, to get outside, to get away from the tape, to get away from your phone, to let your body detoxify, to decompress, to just let go of all of that stress a little bit. You can enjoy your life. It's great for your health today. It'll be great for your performance next week. And it's great for your future self as well, because you're going to live a better life, a better quality of life, and you're going to be healthier down the road for it. So get outside, get away from the tape, get away from your phone, get away from the streams, the Twitter streams and all that stuff. Get away from this media and just let yourself go a little bit. Be creative, let your mind wander, play, have a good meal, hang out with people that you adore.
Go jump in the ocean.
Go jump in the ocean. The ocean is the best medicine, man. Walking the ocean, that is the ocean pill is top-notch pharmaceutical right there.
How about jump in the ocean and then go walking on the beach?
Jump in the ocean and walk on the beach. It covers all bases. Be better. If you're with somebody that you love, even better.
Can you talk about the walking on the sand, right? There's something to that, right? It's not like there's walking on concrete. It's great. Nothing wrong with that. But the sand is a whole nother level, right?
So JC is sneaky health nut, right? He doesn't let on. He acts like, hey, I'm drinking. Hey, but really, he's following all these things. So he's familiar with grounding. Yeah, we're animals, right? We're animals, just like any other animal out there. Our hearts are beating. We're going to die one day. All of this stuff with animals, right? We have a primitive brain down in there, the amygdala. And we need to not only get out there, but touch earth too. So we put our feet on the real earth, whether it's grass, whether it's dirt, whether it's sand, as you're pointing out, which is always a great one. We love it. There's a reason we love it. It's instinctual. And
should see my
yeah, so to
kids.
get your feet and
The
walk
baby
barefoot
loves it,
on the
girl.
sand is mwah, chef's kiss.
You should see when you talk about how there's something in it in ourselves that appreciate it. These kids are 8 months old. You know, they're touching sand for the first time. They loved it. Like they loved it.
Right.
Like they had done it 100 times, and it was the first time ever. Like there's something there, right?
There's more than something there. It's everything. We're just so removed from it in our modern society. We're living in an urban setting. Everything's concrete. We're in a suburban setting. We spend so much time in our homes. We don't move enough. We sit on the couch. Whoever said the vitamin D pill, love that. Get out. The sun is a natural pill, just like the ocean. Get some vitamin D. Ken K said that. I love it. I got all these comments coming out. I fucking love this. I want to get to one other thing, though. I want to talk about market psychology right here and now. So anyway, get out, de-stress, detoxify. It's unbelievable.
Hold on, let me stop you real quick before we get to market psychology, because this is really important. At the end of the day, what we're trying to do here as investors is make money. That's what we're doing. This is not the glorified gossip columns. We're not sell-side analysts, thank the Holy Lord. That's why we still have jobs. We're not economists, thank the Holy Lord, right? We're trying to make money in the market. That's what this is about. So when we talk about going for walks, eating healthy, sleeping well, can you talk about how what we're essentially doing is putting ourselves in a better position to be able to think clearly, make better decisions versus staying up all night, partying, doing drugs, getting up in the morning, and then trying to make money in the market? Who's going to be able to think more clearly? Those that are eating clean, sleeping well, staying away from drugs and booze, or the one who's waking up with a hangover, right? Looking for bacon, egg, and cheese, right? I've been on both sides of that.
You're exactly correct. I call this performance alpha. And this is basically when you live clean, right? When you eat well, when you sleep well, when you move your body consistently over a long period of time, you improve. And this is empirical basis. This isn't just me spouting. There's research backing this up. Boom, boom, boom. You could go to Prime Cuts and see. I write about this all the time. You improve your energy level. You improve your mood. You improve your ability to tolerate stress repeatedly. And there's nothing more stressful than markets. You improve your ability to focus. You improve your self-efficacy and self-confidence, your belief in yourself to do well, to be the ball, as they say in Caddyshack. All of those elements are with you every single day in the present. And so when you get yourself healthy, body, mind, spirit, you're improving your future self, right? You're gonna live longer. You're gonna be healthier for longer, and you're improving your apparatus. If you're a trader, if you're a market participant, you're trading. You have tools when you're trading, right? You have your charting software. You have your, whatever. You're entering your trades. You also have this apparatus. You're improving that as well. I can't stress the importance of that enough. Performance alpha. There's other elements too that I didn't mention, but
like for
really
example,
stress
if you're
tolerance, focus, energy, mood are really primary. Force, controlled force, the Mike Tyson punch. You get aggressive when you want to be aggressive. Your ability to do that is also enhanced.
Pearlman, I've been there. If you're hungover, you feel like crap. Your stomach is rumbling, like you're hungry, like your body's going through withdrawals, like you're sweating. You're going to be revenge. There's a higher likelihood that you're going to be like revenge trading and trying to overcompensate because your body doesn't feel well. So you want to like hit that grand slam on the trade, because you think that making that money on the trade is going to make you feel better. In fact, you're probably risking too much. You're making bad decisions, and you're just going to compound the negative effects of your behaviors in the previous evening, right?
100%. If you're hungover, do very little in the market the next day. As a matter of fact, maybe you take the trading day off and go for a walk. C. Marie, information processing speed. You're exactly correct. Getting healthy improves your cognition, your ability to process new information quickly and accurately, which is what you need in the market, especially the more active traders, but really everybody.
I love this, Pearlman. All right, listen, we got a few more minutes. I'm going to hop early today because I'm at the beach, Pearlman. I'm taking your advice. I'm at the beach. It's beautiful. I'm going to go jump in the ocean. The whole thing. So let's talk about market psychology from somebody who was buying small caps a couple of months ago. How's that working out for you there, Pearl Dog?
Dude, let me just tell you, I'm really not a trader, guys. I'm a long-term investor. I've been through the whole trading thing, and now I'm just preserving and growing wealth. And I really don't do much in the markets except for just keep buying. Buy when the market gets killed. Buy when the market's doing nothing. Buy when the market's going up. Over the talk about trends, over the very long term, markets go up. However, every once in a while, I like to take some flyers, and I love my boy JC. We talk all the time. And, you know, sometimes a theme of his resonates with me, and I get it. And the small cap one was just a beauty. So I thank you for that. It was you all the way. It was just me riding the tailwind all the way. But I do want to briefly mention a couple points about market psychology right now, because the market that we're in right now is a transitional market from a psychological point of view. Listen, bull market started a long time ago. No argument there. You were talking about it since the autumn, right into the bottom. What was it, like an October bottom or something like that? You were talking about it right into that. It was sick. September, October, November. But however, there's a difference between, from a technical point of view, when the bull market started, and from a psychological point of view when the bull market started. And the bull market in psychology is really just getting started now. You've had so much negativity. You've had so many people. 4 weeks ago, when the Qs were going up like crazy, everybody was like, look how far they are from the 50-day moving average, 200-day moving average. This market's going to be. And guess what? Market went sideways for 4 weeks, right? Total bull market type of action, corrected by time. And so what you're seeing now is people starting to transition from negativity to like FOMO. Fuck, I missed out. I got to get aboard. I'm bearish. I'm getting killed in my puts, blah, blah, blah. And so what happens there is not necessarily volatility you're going to see in the VIX, because it's not fear, right? It's not a reflection of fear. It's more emotional volatility. This transition from everything's terrible, inflation, politics, blah, 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 to holy shit, I'm missing out, to holy shit, you know, I got to get aboard, and then buying. So my point there is that these are processes, they take time. You're not just going to see this change in sentiment overnight and then the bull market's over. You're going to see this change in sentiment, and then there being a lot more action behind the sentiment, following the sentiment. Feeling is first, right? E. Cummings said, since feeling is first, who pays any attention to the syntax of things? And that's exactly there. Emotion changes and then actions follow. So that's my point. Things go on longer than you think they are. Also, I just want to, and you know, you could call that get-evenitis or whatever you want to call it. That's what the old behavioral economists used to call it. One other point about that, take note. Here's a thing to take note of, okay? We are inefficient information processors, right? We are Commodore 64s living in a world of deep minds, right? Of AI, chat, GPT, or whatever. We are old, slow computers. So take note of how slowly we, not just everybody else, but you yourself, we shift how we're thinking relative to what's happening in the world. The world's changing all the time. The world's moving 1,000 miles an hour, and our brains are only moving very, very slowly. It's a limitation that we have, a cognitive limitation, and it's very observable during these periods of psychological transition.
I want to add to that. Mitchell Glazer here. What's up, Mitch? Chiming in about how to quantify this. Listen, we've done a lot of work on this, and I have a lot of friends and mentors and colleagues who've also done a lot of work on this. And what I have learned over the years is that there's no one magic indicator in terms of sentiment. It's not individual investors. It's not just Wall Street sell side. It's not the Twitterati. It's about aggregating them all. And I think we do as good of a job as anybody at aggregating sentiment. We really work hard on that. And even still, we know that it's not perfect. We know that it's incomplete. We know that, but it's good enough. So the answer is it's about bringing it all together. Sell side, economists, just the short interest, right? There's a put call ratios, the combination of a lot of things. And we are coming off some of the most pessimistic levels of all time, right? Of all time last summer. And what we've learned over the years by observing market behavior is that from one extreme, we tend to get to the completely other extreme. We overshoot. To quote the great John Roque, we're not in a reversion to the mean business. We're in a reversion beyond the mean business. And when you look at where we currently are, a lot of these sentiment indicators have come off their lows and are somewhere in the middle. Some of them might be getting a little bit more optimistic, but a lot of them are still incredibly bearish, very heavy cash positions, large speculators, still very net short. This is the dumb money, if you will, very net short. The sell side analyst, Wall Street sell side, has its most pessimistic second half outlook to a year ever in history. So if the sell side is the most pessimistic for the back half of the year that they ever have, I would argue we're probably not at a euphoric stage just yet there, Pearls. In fact, we're probably nowhere near it.
That's it.
Beautiful. I totally agree. And thanks for the really kind words up here. I'm looking on this. Sam, Mitchell, everybody out there.
Dude,
Mitchell Fintwit, I see you, sister.
Pearls of Wisdom. Why don't you call your blog Pearls of Wisdom, Phil? That's a pretty good name.
That's a good one. Pearls of Wisdom.
I'm going to change everything. I'm going to change all my URLs. I never thought of Pearls of Wisdom.
Pearls of Wisdom.
Oh, here we go, Sam. You should charge for that.
Yeah, I can't do
All
that.
right, guys. Phil, I put the link to Phil's blog on the screen like for 5 minutes. It's Prime Cuts is the name of his blog, primecuts.substack.com. Phil, always great to talk to you.
You're the man, Pearl Dog.
Adios, guys.
All right.
Love you.
All right.
Adios.
Listen, Spencer, I'm out too before you bring in Kimmy.
Don't
Don't
do it to me again.
I'm out. Listen, guys, I love you. Happy Crypto Fridays. I got some celebrating to do. I got to hang out with the fam. I'll be back at the desk on Monday. We have our conference call Monday night to prepare for. So premium members of All Star Charts, look out for that. Make sure to register, and I'll see you on Monday evening. Spencer, I will see you on Slack. And I will see you on Monday morning. Adios, guys. Love you.
Oh, man. Must be nice to be at the beach. I'm going to the beach, to the shore. Actually, I might go for a day trip, but in September is when I usually go. So must be nice. All right. Well, the rest of us have to work here, and Kimmy has been working. Let me tell you. Let's say busy day for her. She was active in Amazon, in Meta, and NVIDIA, looking at Tesla and Google. A lot going on in Kimmy's world. Let's hear from her. And rather than me just telling you, let's just hear straight from her. Kimmy!
Good morning.
JC has left us again to go to the beach. I can't believe it. But I know you never stop.
I probably need to stop soon.
Yeah, maybe you should take a vacation just to, it's summer. That's what we do, right?
A little hard. I was supposed to go away just for the weekend next weekend, but my dog has had a little surgery this week, so I will not be going. The family will be going, but I will not be going.
Well, I hope your dog is
doing at home with
okay.
the dog.
Yeah, I hope he's doing okay. Okay, let's talk about yesterday. What'd you see out there? We were talking about how JC was saying it was the best day of his career, gain wise. Tell me what you saw.
Yeah, I mean, hey, if you're long and strong in the market, you're doing very well. So this is my trading account, right? So you have to keep in mind, I trade. I have a longer term account that I invest in other names and whatever, but that's something separate from this. I'm not here to be a long-term financial advisor to people. I'm here if you want to trade, so this is what I do intraday. I'll take counter trend trades. I'll go long trades. I'll stop out of names, and do all that stuff, So we had a couple of good trades yesterday. I didn't do as much as the day before, but I made other recommendations in Google and Tesla. I recommended Google at like 123.50. I recommended Tesla around 271, 272. Had a nice move to 275 and then some.
Do you find it more or less difficult on days where there is a clear trend like yesterday?
Yeah, obviously it's a lot of FOMO going on. A
Oh
lot
my
of
God.
they're pushing this market. Oh my God, they're pushing this market. I have to tell you, listen, I've been trading since 1997. I'm going to date myself, so I was a part of not saying anything, but this reminds me of a little bubble-ish kind of. So not saying it can't go further. Anything can go further, but always remember you revert back to the mean overall. Um, so you always have to be careful. Not saying in a long-term account, long-term account, you can ride the trend, you can ride the 200-day up, you can ride the 8-day up, you can ride the 21-day up moving averages. You could just ride the trend and stay with the trend. But if you're going to trade, you just have to be careful in case all of a sudden you have a little snapback, right?
That's right. So
You get a rug pull.
so the trick is, or not the trick, the key really is that you're always disciplined in your stops and always disciplined with you're more disciplined with your losers than with your winners, right?
Yeah, I mean, sometimes I'll stay in shorts, but I add to it throughout the way. I can't tell people, I tell people in the room, you don't have to short. You never have to short. You don't like shorting? Don't short. Most people don't like to short. Probably, you don't need to short. If you're trading, you could short, right? But even if you're trading, like, hey, if I'm taking mostly short trades today, you don't have to do it. Stand back. Like yesterday, we came in and we were long Amazon, and we had nice execution. We sold it pre-market. It was a great day for Amazon. We've been in that for 2 weeks already. But if I took some counter trend trades on the short, you don't have to take them. I don't, you don't have to do it. And if I stay in a short for a while, most people can't do that. And I don't expect them to, because I'll add along the way. Like you might think it's a loser, but I'm shorting on the pops and then the drops, because some of the names that I'm short have wide movement. So even though my original shares were lower, I've already made back my money.
Right.
But some people do not trade that way. And that's hard to teach someone to do that,
right.
right? You're buying the dips are easier than me telling you to short the rips. Right. Okay. So I'm not going to go sit there. Like odds are the day I took a short or something and went against me, like most people should stop out. I might stay with it and play with it and add along the way. But my shorts are always a fraction of my longs. So they're never, I just stay with it, like play with it, whatever, they're not big like my longs.
Right.
My longs are like 10 times bigger than my shorts.
Okay. That's smart. That's a risk thing, guys. JC and Strazza obviously are not trading through the open because they're usually live on the air when one of them is not overseas. But Kimmy is trading at the open, which is actually in 8 minutes from now. So I'll let you go. She's there in her room every single day, along with other people. Obviously, it's not just her. There are other people in the room too. They're all dropping ideas every single day. It's a great community that they've got. If you want to get into the room, there's 3 different ways to do it. 1, scan the QR code on the screen. 2, click on the link in the chat. 3, click on the link in the description. All those links will get you to her page. You can sign up, and she's there every single day, super consistent, and always just talking with you trades. So Kimmy,
Spencer, 1 second.
Yes.
Someone asked what type of dog. Rachel, I have a Rhodesian Ridgeback, and she's 14.
Whoa,
Old lady.
14.
Yes, and that's a big dog, meaning that's an 80-pound dog at 14.
All right.
Sorry. Give a little shout out to her. She just came home from the hospital.
All right. Well, we hope things are better next week. Have a good one.
Me too.
All right.
All right. Thanks, Spencer.
All right. We'll talk to Kimmy on Monday, as always, because Kimmy's like a rock. She's consistent as they come. Okay. Let's do this. Let's do hot corner. We had like one thing. Fonz, didn't we? We had like one thing on the hot corner today. We had like one insider buy, I think. I'll play the bumper, but here.
Hot corner. So hot right now.
Is there even anything worth mentioning? Let's see. Hey, the isn't that the what sovereign wealth fund is that? That was doing that bought that stock there. Is that is that UAE? Someone one sovereign wealth. Anyway, who cares? Nextera Energy. That was one with the unusual option activity yesterday. Okay. Oh, look at that support. Look at that support. Interesting. All right. Well, maybe they're chartists over there. Whoever was doing that was it a call buy? I didn't look super closely. I assume it was. Anyway, okay. Hot Corner, guys. It is a free daily note that tracks all the biggest. Okay, yeah. So I was directionally right. It highlights all the biggest transactions from Wall Street to the boardrooms to Washington. If you want to get the Hot Corner for free every single day, just email us. Questions at stockmarketmedia.com. I'll put it on the screen. Just put Hot Corner in the subject so I know what the heck you're talking about. There it is. And you can get that. Again, it's every day. And it takes 2 seconds to read because it's just a list of the biggest insider buys from the previous day and unusual options. So, okay. Enough of that. Let's do chart report super quick as well. Let's bring that up on the screen. Where's my chart report? And then I'll bring Ian Cully on to talk about rates. I haven't talked to Ian Cully in a while. He's been feeling under the weather, but he's back now. So, chart report, screw the bumper. I'm not doing it. Just bring it up on the screen. Here we go. This is yesterday's report. What do we got? Anything interesting? Oh, surprise, surprise. Chart of the day was Bitcoin. Stunner. It seems like everyone is focused on crypto right now, right? Myself included. Maybe that's a signal. When I'm focused on crypto, I've really never sold any cryptocurrency. I've only ever bought. And I haven't bought in like 2 years, right? But I'm thinking about it right now. So, okay, what else do we have here? Oh, it's all tech heavy. It's all NASDAQ. Yeah, everyone's feeling good. Everyone's got bullish charts. Surprise, surprise, surprise. Everyone's got bullish charts. Don't short a summer market. Hey, actually, Callie Cox will be on the show next week. Fun fact. Let me know in the chat if you want or are interested in me like posting the guest schedule ahead of time. I don't know if I want to do it because I kind of like the idea of the guest being a surprise every day, but I will if y'all say that you want that. Okay, chart report. Again, another free daily note. Scan the code on the screen. Use the link in the description to get the chart report. And then that's it. Okay, a couple people saying yes. Next week, guys, is going to be stacked. I'll just tease you a little bit next week. Okay, we have. I'll tease you with 2 guests. Okay, we have Callie Cox and Louise Yamada. I'm not going to say which days they're coming on, but they're both on the calendar for next week, so it's going to be a good week. Okay, you know who's usually on the calendar for Fridays is Mr. Ian Cully. He is head of FIC at All Star Charts. And I haven't spoken to Ian in a couple of days. He's been feeling a little under the weather, but I think he's back now. He couldn't miss this market. We got to get Ian on here, talk about what he's seeing in his part of the world, and let's talk some rates. Ian!
Good morning.
Oh, you sound normal and you look normal.
I know, it feels great. I'm glad to be back. I'm glad to have my voice. Just be back in the saddle.
Dude, our kids are just like virus machines, right?
They are. I ended up catching COVID again.
What?
Yeah. It was pretty nasty.
I did not know you had COVID again.
What's that?
You had COVID again? Is that what you just said?
Yeah, I got COVID again. Yeah, I got it a couple years.
Oh, man. All right. Well, I mean, hey, you sound good and you look good. And the hair is looking fire. So,
it's a bull market,
It's a bull market. All right, Ian. I know you have charts that you want to share. And before we get into that, I want to say that we are doing What the Fic today at 11:30 a.m. Eastern Time. We're going to be talking about the dollar. So stay tuned for that. But for right now, Mr. Cully, what's going on here? This is the 10-year.
Yeah, JC reached out last night and he was curious about the positioning for U.S. Treasuries, 30, 10, 5, and 2 year. But before we get to the positioning, I just, this is how I see the 10-year yield right now. A series of consolidations that have resolved higher, and there's no sign of a trend reversal. So before rush out and think about buying bonds, now that the dollar's starting to roll over and the Fed's probably going to pause after this hike later this month, I think we need to look at the charts and actually see what price is telling us. And that's what I want to do this morning.
Okay. So let's go through a few other ones here. And what is the price telling you?
So first up, let's check on chart 3 real quick. So this is going to be the commercial and large speculator positioning for the 10-year T-note. Now it's near extremes.
Holy moly.
And the large speculators in black are actually down near record levels. They've never been this short, the 10-year T-note, in history. So extreme positioning like this tends to result in strong moves in the opposite direction, as you can see, as it did in 2018. So it stands to reason, could we see a squeeze in the bond market, right? The conditions are there from a sentiment standpoint. That's what this chart is telling us. But when we drill down and look at price, very, very different setup than what we saw back in 2018. You can see that base and that rip higher that we got as large speculators and commercials unwound their positioning. So let's look at a chart. Let's see here, chart 12. This is 2018. Pull up chart 12. Here we go. Perfect. So in the lower pane, we have the 14-day RSI. So notice we have this bearish regime. The momentum can't get above 60. And that's what we tend to see during a strong downtrend. And that's exactly what we got into this constructive basing formation. Now, the first sign that this was a constructive base is that the bulls were able to push this momentum above 70. They were able to register an overbought reading. They landed a punch. That's constructive. We're like, all right, bulls are playing ball here. But later that year, bears push price lower to new lows. We get an oversold reading. So there's this tug of war going on between the bears and the bulls during this reversal pattern. Ultimately, the bulls prevail. They drive prices higher, and we enter a bullish momentum regime, right? And an uptrend. Now, this is 2018. Let's look at chart 13. This is today. 14-day RSI hasn't hit an overbought reading in 2 years. In 2 years. So there are no signs whatsoever looking at this chart that the bulls are actually playing ball here, right? Every time they drive prices higher, bears step in and sell, right? I tried buying bonds earlier this year. And one of the key characteristics or pieces of confirmation I wanted to see on that breakout, reclaiming the pivot lows from last July, was an overbought reading in the 14-day RSI. Never got it. Breakout failed. Pressing against the lows from earlier this spring. So there's really no trade right now when I look at the bond market. And as I look at the charts, they're bearish. Look at the 5-year. Look at the 5-year T-note on slide 16. This is what I see when I look at bonds right now. Potential continuation patterns within an ongoing downtrend. This is not a chart that I want to buy. Now, is there a potential for a squeeze in bonds based on extreme positioning? Yes, absolutely. Absolutely, 100%. But man, we're in a bull market. Coin was up 25% yesterday. If we're looking for squeezes, there's plenty of other opportunities elsewhere. I think for now, we need to keep bonds on the back burner. Definitely not a buy. Maybe shorting, the 10-year T-note, isn't in your wheelhouse. And I think just underweighting bonds is an excellent way to get short. And even if, that's not something you're interested in, I think just as investors, we need to be aware that rates could continue to rise into the back half of the year, and we could see another leg lower in U.S. Treasuries.
Oh, yeah, all I'm hearing from you, Ian, is there hasn't been and there continues to not be any reason to buy bonds.
Absolutely, yeah, exactly.
So the narrative has changed dramatically this calendar year with regard for the stock market, right? Last year was obviously the worst year for stocks and bonds combined, I think, ever, right? But the bond market has not flipped at all. It's been more of the same. So maybe in the back half of the year, if the Fed starts to signal that they're gonna, well, they've already said they're probably going to stop raising after this next meeting here, probably. But if they signal, lowering rates, maybe that changes things. I don't know though. But all I'm hearing here is just keep on keeping on, not buying bonds, and you'll be good to go.
It's funny you're throwing around in the meetings and in the chats short the two, sell the two.
Yeah, you keep saying that.
I know it's part just jokingly, but I think more of the reason I've been throwing that out there is just to keep in mind that we could see falling bond prices. We could see a continuation of that downtrend. But what's funny is that the 2-year out of all of the bonds, at least the shorter end of the curve, and you move over to slide 17 and slide 18, if there was an area of the curve that you would want to buy, it would be the shorter end. And we got record level.
Very weird. Very weird.
Here. And when you look at the 2-year T-note in slide 18, bulls managed to post an overbought reading earlier in last spring in March. So we're seeing this tug of war now between the bulls and the bears. And if there's going to be a lot of movement, honestly, in the yield curve, it's probably going to come from the shorter end, right? The 2-year, it reflects what the market is anticipating the Fed's next move. By
the way, I have a bond PSA or fixed income PSA to give. Like a lot of people last year, I bought I bonds, right? I was mesmerized by what was the yield? How high did it get? Like 10% or something? I don't even remember anymore. So I bought I bonds last summer when the yield was as high as it got, right? And I would recommend, if you can avoid it, most of you can, never ever buy bonds straight from the federal government. It is a gigantic pain in the ass to deal with. Treasury Direct is the website. It is awful. God forbid you have a question about your I bonds and you want to talk to someone to forget about it. Ain't gonna happen. I'm dealing with something right now where I'm trying to transfer I bonds from one account to another account, and it's just been like a awful experience. Probably not worth the interest that I got, dare I say. So anyway, if you're gonna buy bonds, right, do it in your brokerage account. Do it via a bond fund or the futures if you want, really, but don't go to Treasury Direct and buy bonds from the Department of Treasury. It's been an awful experience. So
yeah,
that's my my bond advice. for everyone. All right, Ian, you and I will be on in 2 hours from now on What the Fick here on Stock Market TV, 11:30 a.m. Eastern Time. We're going to be talking about the dollar and the implications of the weakness of the dollar. And you have some charts ready, so
I do. I also want to touch a little bit. We'll touch a little bit then on just gold and silver and how they're responding to the weaker dollar. And what could be going on there. We'll discuss that. I got a question here about the 20-year Treasury. I have the 30-year T-bond profile on chart. Yeah, slide 10. Not extreme, not nearly as extreme positioning, and that's the trend moving further out on the curve. So the closer we get, the shorter duration, further down the curve we go, the more extreme positioning we're noticing right now. So yeah, it's again, like I can't recommend buying bonds right now.
More of the same, man. I think and the thing about the bond market as opposed to the stock market maybe always has some perma bears and some perma bulls, and the perma bears are fighting right now.
Yeah.
The bond market, it seems like everyone is mostly in agreement, right?
Yeah.
Like.
Yeah, absolutely.
We're all in agreement. We're all in agreement about that. So that's cool. All right, Ian Cully, we'll be on later. What the Fick? I'll see you there. All right.
Have a great week, everybody.
All right. I wanted to mention because we didn't mention yet today, but obviously the guys are in Asia. They'll be back the end of next week. They'll be back like a week from today. Okay, so next week is their last week in Asia. We're doing this documentary. It's going to be freaking amazing. If for whatever reason you haven't signed up yet to get alerts when the documentary goes live and to join us for our watch parties, I'm going to put the link on the screen. It's also in the description of this video on YouTube. Our documentary is called Wall Street to All Streets, and it's going to come out probably the first episode. I'm hoping in like September, just to give you guys a rough idea of the timeline. I'm hoping in September, but don't hold me to that. It's going to be episodic, not all in one shot. We're going to release them one at a time. And we're hosting watch parties, showing behind the scenes footage. And if you want to get alerts to that, we will eventually make the documentary widely available to the public. But for now, we're not going to do that. We're just going to give it to the people that sign up. So there's a link on the screen. Check it out. And yes, C. Marie, you're totally right. I inherited some bonds a couple of years ago around COVID, and unbeknownst to me, and I had never even seen a bond before in my life, a paper bond, and it was literally paper bonds that my grandparents bought me 30 years ago to pay for college. And spoiler alert, it didn't pay for college. Student loans paid for college. But anyway, okay. I'm actually cool with ending the show earlier today for a few reasons, not the least of which is the water in my building is going to get shut off at 10 o'clock today for like 8 hours. So I need to go take care of that and make sure I have enough water to get me through the day because I don't even have my water bottle here. So I'm going to go do that. But everyone, have a great rest of your day. If you're watching us on YouTube, hit the like button. If you're watching us on Twitter, thanks. But come over to YouTube also and hit the like button. Hey, tell your friends, all right? Share the show with your friends. We're still in like hyper growth mode over here. We have a small audience and we're growing every day. We're getting better all the time. And next week I'll have some fun new soundboard features to debut. That'll be exciting. And got some great guests as always. Spence, are you locked into the rate you bought the bond at? Yes, I am. No, wait a minute. Are you locked? No, you're not. You're not locked in. The bond rate is fluid. It changes, and the rate you get changes. But I got it specifically for that 6-month rate a year ago. What, 9%? 8%? It may have been 8%. I think it was 8%. Yeah. Anyway, okay. I'll head out, everyone. JC's not even here. JC's at the beach, and I'll let you guys go early. Let you guys go as if you have to watch. Thank you for watching, though. We really do appreciate it. Obviously, if you have any questions, comments, concerns about anything, please email us. By the way, our website is live. It's been live. I haven't told you guys about it because we're still adding features and functionality. But if you want to go check it out, it's stockmarkettv.com. Our show, you can actually watch our shows from that site. Starting shortly here, we are going to be because we have a chat on that site as well, and we're going to start giving priority and adding more features to the chat on our site. But here, I'll just show you myself on our site so you can see what it looks really nice. We're just still adding more features to it, but this is what our site looks like. It's stockmarketmedia.com. If you subscribe to Kimmy's Room, if you subscribe to Chart Report Private Access with the Buzz, you will be able to access those through this site. So anyway, that's your site. If you want to check it out, you can. And great. Awesome. You learned about JC from Josh. Josh is going to come on our show. One of these weeks, we'll get Josh on the show. I don't know when. He's a busy guy. All right, everyone. I'm going to hop. Have a great rest of your day. Happy Friday. Go make some money. We'll see you guys on What the Fick at 11:30 a.m. Eastern Time. If I don't see you there, have a great weekend. See you Monday.
Run it. I can't take no loss.